If you've been following Alibaba at all, or more generally the Chinese markets, then you'll definitely have heard about tons of regulations coming down from the Chinese government that might be impacting Chinese tech giants like Tencent and Alibaba. And for a lot of people, this is probably the number one reason why they might want to stay away from investing in these companies. I have been trying to keep up and study Alibaba and Tencent in particular, and what I'm looking for is a lot of disconfirming evidence, but when I find some compelling confirming evidence, then I really take that to heart and I wanted to share it with you as well. The typical spiel is basically that the government is going to take Alibaba private. You're never going to see any money as an investor in Alibaba. The government's going to completely ruin the business, etc., etc. These are a lot of the common objections to investing in Alibaba, but I actually recently found an investor letter from the notable value investor Thomas Russo, and he shares some of his thoughts about why he thinks that these regulations in particular might actually be good for Alibaba in the long term. And I'm certainly not saying that Russo is absolutely correct and everybody else is wrong. I just think that this is a valuable way to look at these companies such as Alibaba and Tencent through this lens. Moshe Mabrais actually talked about this, where he thinks that the regulations are actually going to be a long-term good for Chinese companies as well. At some point in this letter, Russo mentions that he's not entirely sure that this is going to benefit shareholders, but it should benefit the long-term prospects of the company. So he's not guaranteeing that just because you're a shareholder of Alibaba, you're going to see any of these positive benefits that he can possibly see with the regulations. Let me know in the comments below if you've read this letter and if you agree or disagree with any of the points that Russo makes here. As always, I will leave a link to this letter in the video description below. So with all that said, let's jump into the letter and see what Russo is talking about with Alibaba. It's probably going to be beneficial to read this entire letter. So far, I've only read the portion concerning Alibaba directly, but he does talk about his other positions such as Nestle and Berkshire Hathaway, which I think are the two largest positions in his fund. But at the very top, I'll just give a little bit of anatomy of the letter. He provides some of his investment performance metrics. Since inception, he has outperformed the market. So just to point that out, that he has some credibility as an investor. He's been in business for about 31 years and he's beaten the market by 1.5%, or at least he's beaten the S&P 500. Recently, he has lagged the S&P, but he's been around long enough that I believe that we can kind of conclude that he is a sharp thinker, that we should probably pay attention to his commentary. We have an excellent opportunity to clone some of the ideas from one of the great super investors out there in Thomas Russo. And while what he says is not necessarily the gospel truth, I think it can provide some helpful backdrop and lens to look at the Chinese regulations through. Russo is pretty well known for investing in wonderful dominant brands and companies like Heineken, Nestle, and MasterCard. All right, so a few pages into this letter, he starts to talk about Alibaba. He starts off the letter with a description of Alibaba's business, and if you aren't too familiar with Alibaba's business, I would definitely recommend you read this. And I also have a couple of videos on Alibaba. I'll link a playlist over here where you can check those out. The way I approach reading letters like this is I will basically just annotate as I go through what is sticking out to me. The first thing that sort of stuck out to me, which doesn't have to do with the regulations, but I wanted to cover it quickly because I think it's a strength of the business, is Alibaba's capacity to reinvest and management's capacity to suffer. And what he means by this is that Alibaba is willing to take basically no profits and suffer the short-term pain in order to reinvest into the business and hopefully have benefits in the future. This was something that's really important to Jack Ma, and it reminded me a lot of Jeff Bezos and Amazon, where basically they didn't want to be a profitable company. They wanted to continually reinvest in the company, and that's sort of a parallel that I'm seeing. Basically, Jack Ma wanted to invest in projects that would increase the intrinsic value per share as much as possible over the long term. Then he goes on to discuss the net cash position that Alibaba has, saying that it has a solid balance sheet and financials. Then he talks a little bit about valuation. Oh, and one important thing to note before we get into the commentary about the regulations from Russo is that he doesn't have a huge position in Alibaba. It makes up a little less than 3% of his portfolio. So it's not like this is some super high conviction bet for Russo. And his rationale is sort of that he's willing to take a chance on the business because the business is so strong and undervalued. But he does have some trepidation regarding the environment that the business is operating in. So keep that in mind when reading about these regulations comments. Okay, so a little bit further down the letter, he gets into what he calls the disinfectants, or that's his term for the regulations. He says that since November of 2020, there have been over 40 major decrees threatening to strip companies of products and power and things of that nature. Of course, Alibaba has not escaped these regulations. They were fined almost $3 billion for some anti-monopolistic practices, which he talks about later in this letter. And Alibaba was heavily affected by Ant Group's stopped IPO. Alibaba owns about a third of Ant Group. So Russo's overall argument is that these regulations are actually going to be good in the long term for Alibaba. He describes these as disinfectants. He says they're disinfectants designed to combat toxic risks that have risen over decades of business misconduct. In many instances, it will make Alibaba's long-term business run more smoothly. So right away, we see Russo coming from a vantage point that the government is not out to destroy its best companies. It's actually out to create an environment that will make competition more fair and less toxic. It's really easy to take the cynical approach when looking at the government's actions because, of course, it looks like they're taking a hammer to their best companies. One man has all the power to destroy an entire company if he wanted to, for instance. And I'm not saying that that's not possible, but this is sort of a flip side to that view. So he breaks down, I think, 7 different sections that have been affected for Alibaba. And this is not comprehensive, but these are some of the bigger ones in his mind. So the first entity that he talks about that's being impacted is Ant Financial. So he described Ant Financial's business previously as providing a bunch of customers with unsecured credit that could potentially have systemic damage in China. Because Ant Financial wasn't a typical financial institution, they did not have to have a bunch of reserves, more like a traditional bank, so they could make these unsecured loans without anything really backing it up. Russo says that there weren't even any reliable credit checks available to determine the amount of risk that Ant Financial would be taking on with these loans. Up until this point, nothing had really gone wrong with these loans, but in a recession, something bad, really bad might have happened. So now Ant Financial shares these risks with the government, and they also have to have larger reserves on hand now. And this might put a damper on their short-term growth numbers, but over the long term, it should make their profits and business more sustainable. It seems like the goal of this regulation is to increase the stability for this company, which hopefully should extend its lifetime. So yeah, in the short term, this definitely hurts Ant Financial, but in the long term, I can definitely see how this is a good move. Next up, Russo discusses data security. The background here is that Alibaba is basically the largest data source in China because of all the consumer and customer data that they can gather from their various platforms. Part of Russo's argument is that this data might fall into the wrong hands, and the Chinese government is paranoid that somebody else might have access to this secured data. This fear of losing data to a non-Chinese entity was sort of reinforced by what happened with the Didi IPO. The government had warned Didi and had clearly had concerns about the security of the data in the company. So the way that this could benefit Alibaba is the fact that Alibaba already has the lead in data. And if there are more strict rules about data collection, then there's no way that another company can use sort of illicit means or sort of shady means to catch up to Alibaba's quantity and quality of data. And also the company is going to be collecting more quality data and more secure data. So hopefully that will increase the marketing opportunities for specific customers and increase the engagement with the platform as a whole. Okay, next there's this practice of below cost pricing. There are some very low cost providers that are selling products for less than their cost. And one prominent example of that is Pinduoduo. So basically Alibaba is being undercut on the low end by companies like Pinduoduo who are using these below cost selling strategies. So any regulations there should benefit Alibaba's higher quality product offerings. There might be fewer incentives for customers to go to a platform like Pinduoduo because that cheap price won't be as available, and there might be a lot more trust in a platform like Alibaba. Russo next talks about future investments, which could include reinvesting into their own business, and also the recent common prosperity sort of initiative in China, where large companies like Pinduoduo, Tencent, and obviously Alibaba are all setting aside a bunch of money to invest into technology and things like that. The common prosperity investments in particular are going to come over the next 5 or so years. These investments should help the community at large and Alibaba's business grow. Also, future investments like this are signals from companies like Alibaba to the government that they are willing to play game, and it's also driving them and making them more entrenched pillars of the Chinese economy. Again, that doesn't up and stop any negative thing happening to the business overnight. Part of the government's initiative is to invest heavily in hard tech. So if Alibaba is investing in potentially new avenues for business that might also help the goals of the government, then that might mean more money for the business and more prosperity for the country as well. Next, we have this practice of choose one from two, which Russo gives the example through the lens of delivery companies, where a merchant could really only list on one platform. So if a merchant is listed on Alibaba's delivery platform, then they basically weren't allowed to list on Tencent's delivery platform. Practices like this is one of the bigger drivers for that fine that I mentioned earlier for Alibaba. Clearly, this is anti-competitive, and it's a good thing that this is going away. And Alibaba might benefit from this because previously they didn't have access to these merchants that were listed on another platform, say Tencent's platforms. So now they might have the opportunity to acquire these new customers and merchants. But on the flip side, they might lose a lot of merchants because of it. It's good to see any market introduce regulations against this sort of behavior. Next, Russo talks about counterfeit problems. So there is a bit of an issue on basically any of these platforms in China of counterfeit products. And what that does is really erode the trust in these platforms. Russo says that a core part of Alibaba's business, especially on the platform Taobao, the merchant is taking on enormous responsibility for the authenticity of their products. Russo thinks that there will be more economic logistics and more robust inspections as a result of this. And I think that overall the most important impact will be that there will be a much greater trust in any of the platforms like Taobao or Tmall, where you're pretty much going to be assured that the product will not be counterfeit. Now, this is obviously going to be an ongoing battle because Alibaba has basically an army of people who are in this realm of trying to help authenticity for merchants and the products that they sell. Still, things will slip through the cracks, but hopefully overall the quality and the authenticity of the items will increase. All right, the last area is this umbrella of academic expectations that Russo describes. In this section, he talks about both video games and the after-school education system. There have been recent regulations regarding gaming time for the youth, where I think maybe if you're under 18, if you're a minor, you can't play more than 1 hour, something along those lines, which sounds pretty harsh. This directly affects Tencent, which is the largest gaming company by revenue in the world. And recently we saw huge drops in after-school education companies, basically these tutoring companies that were prep for higher education for these students. These were super expensive and super stressful for parents and children, and it was leading to sort of a decline in the amount of children that parents would actually want to have because these after-school programs were so expensive and so time-consuming. Russo argues that both attempts are to enhance the academic outcome by removing distractions and reducing stress. He says exposure to video games was not healthy nor likely to land one's child a spot at Harvard. So while I'd argue that video games are not evil or necessarily even a waste of time, I'm not sure that the regulations are explicitly saying that either. There does seem to be an element of trying to incline students to spend time in other areas. I'm not saying I agree with the practice or the regulation, but it's plausible to see that it might help out academics for students. I want to read this quote from a little bit later in the letter. Russo says that, as the leader in so many of its businesses, it is our belief that the disinfectant that presently is being administered to China's businesses, social networks, and political networks will eventually result in a world wherein the clear market leaders like Alibaba will eventually go from strength to strength as business practices become more fair and less cutthroat competitive. So to sum up, Russo is arguing that long-term Alibaba will actually benefit from these new regulations coming out in China. From my perspective, some of these arguments are a little bit more persuasive than others. A final word of warning from Russo is that he is sanguine about the pace at which reforms and improvements will show up in benefits for Alibaba shareholders. He is not the least bit sanguine about the extent to which Alibaba shareholders should financially benefit from such reforms. So he is giving a little bit of a warning that while the business may improve, it is not clear what the impact is going to be financially for the shareholders. So again, keep that in mind. These regulations are not necessarily going to play out positively for Alibaba, and they're not necessarily going to be negative for Alibaba. This is sort of a new approach that I don't think we've ever seen before, especially not in the United States. So while it is uncomfortable, it might actually work. But again, I encourage you to read this section on Alibaba and Russo's discussion of the regulations, especially if you are a shareholder of Alibaba. This is really important. Russo's trying to think about what the second order effects of these incentives might be for Alibaba. Of course, I'm rooting for this business to do well, and I hope that the regulations actually do make the Chinese markets more hospitable. If you want to learn more about Alibaba, I have a video over here where I discuss the investment case for Alibaba. And if you want to learn about an Alibaba competitor, I have a video over here I did recently with Investing with Frank that we talk about Tencent. Also, let me know in the comments below if you enjoyed learning about some of these alternate views on the regulations going on in China, because I think it's important to understand and I'd like to hear your feedback. Please like the video and subscribe to the channel. I thank you so much for your time. I appreciate you watching this all the way to the end, and I will see you in the next video.